You're right. Hello, everyone. Welcome to the update here. Hope everyone's doing well. And in today's update, right, pre-market, we had the PCE report. This is the Fed's favorite inflation gauge. I was looking to trade it here pre-market, but what I was looking for was an initial dip for buyers to get attracted to, right? So we can rip this thing higher because there's a lot of expectancy to see this thing pull higher. The PCE was like one of the main figures that was, I think, stalling the buy side from coming out. Once we got the data, right, everything was good to go and we just started bidding. So it was a little difficult for me to get in, right? So difficult that I didn't get in. I tried to short a few times and took some losses, but like the on smaller size, because I'm not very good at seeing these or getting on the larger breaks. I wanted to see at least a head fake lower to get bid back into, but the PCE data that came out was interesting because, right, a lot of people were expecting to see a higher inflation figure in comparison to the prior months, right, what we had seen so far, mainly because of what had transpired with the CPI and the PPI. So there was a lot of expectations to see hotter prints from the prior. The US PCE price index, right, the year over year, the prior was 2.6%, the expected was 2.4. The figure that came out was in line with expectations at 2.4. Now the month over month was a little higher than previous at 0.3%, but in line with expectations. And then the core year over year, prior was 2.9, the expected was 2.8, and what we got was 2.8. So that's solid. And then the core month over month, where is it? Prior was 0.2%, came out at 0.4%. So a little hotter than expected. But the year over year figures, right, they dropped in terms of the prior figures, which is what we wanted, or what they wanted to see in relation to seeing if inflation was getting quote unquote under control realistically. So the way I see this is that the figure that was expected by a lot of people was hotter than expected based on what we saw with the CPI and PPI. So when people saw that print that was in line with expectations, we got a very nice rally to the upside, right? So now we're trading on the S&P a lot higher, right? We're through the prior distribution, trying to accept even higher, putting some upside pressure on this. And I think we continue this upside rip into the end of the week, right? There's no news in front of us anymore, as we saw with the prior days, everyone waiting for PCE, a lot of money expecting to see a slightly hotter print based on what we've seen so far, and we got that reverse and rally. So I'll talk about what we have in terms of a plan that's setting up, but it's looking like they'll probably want to start looking for this dip to buy into. And I was looking for a little more of a downside move before they started buying it, but right, not everything happens like that. Now, it's leap day today, right? It's the 29th of February. It's the last day of the month, and we haven't seen this in 4 years. So the focus will be on how much leap inflation was hit last month, right? So this is what we got with that PCE figure. And looking at this, right, we're still above the Fed's 2% goal. While there are likely to be some knee-jerk reactions from this data, investors as opposed to traders are going to look at this from the broader incoming economic and market data to gauge the longer-term impacts on portfolios. And as you can see, so far so good, right? Tech is probably up on this news as well with those inflation figures, and we're probably going to be positioned to actually see that continuation to the upside. So last few days we had a lot of potential bearishness, but I think that's been flushed out, right? I think that at this point it's fairly solid to buy some dips into the end of this week, clean out the month on a positive note, and start the month tomorrow, March 1st, on a positive note. If we talk about Apple and Bitcoin as well here, to get a little other news on the docket, right? Shareholders have rejected a labor union-backed proposal for artificial intelligence transparency report that would also disclose related ethical guidelines. The AI adoption raises a number of social policy issues according to the AFL-CIO Equity Index Fund's proposals, such as mass layoffs, privacy violations, and spread of misinformation, political elections. So Apple had recommended that shareholders reject the proposal, saying that its policies already address these issues, and the report could encompass disclosure of strategic plans harmful to our competitive positioning. So Apple, like I said before, is one of those names that has struggled a decent bit over the last few weeks here, right, in relation to the other big tech names. And this recent bout of AI proposal, right, the AI proposal to get into the game with other big players that have been leading this AI explosion, hasn't really done it too much, right? It hasn't really done it that much good. And right now, it can't just like flip the switch and start just pumping AI out the wazoo. In terms of Bitcoin as well, Bitcoin yesterday, right, we surged like crazy. Today the surge continues, it seems, right? BTC USD, here's what we're looking at. It's on a massive roll, right? Surging towards all-time high and racking up its biggest monthly gain since December 2020. Multiple sessions in a row, just exploding higher, right? It's up $10,000 in just a handful of sessions here this week. And in many countries, right, in many currencies, Bitcoin has made a new all-time high. So the latest bull run, which saw Bitcoin's market cap jump to a staggering $1.23 trillion over the past 24 hours alone, has been fueled by several factors, including a spot Bitcoin ETF boom that opened the door for mainstream investors and the upcoming April halving event. And in another sign of growing institutional investor interest, Morgan Stanley is considering offering spot Bitcoin ETFs as a broker-dealer platform. So we'll see what happens, right? A lot of people are predicting 150, 200,000, $1 million Bitcoin, right? Whatever the case is. There seems to be really, really high expectations for this most recent bull run that transpired, right? The last time we saw a run like this was in 2020 into 2021 with the stock market in itself. Right, a lot of people are looking at Bitcoin as being a potential beacon for the next wave of inflation potentially, right, to come into the markets. So we'll watch how that kind of unfolds. I don't really have too much of an opinion on this, but this thing continues to rally along with Ether as well and other crypto. So in terms of what we had talked about yesterday as well, with the government shutdown, congressional leaders have struck a last-minute deal to avert a partial government shutdown, reaching an agreement on 6 of the 12 funding bills that have been stalled for months. One set of federal agencies, including the Department of Commerce, Energy, and Justice, will be temporarily funded through March 8th, and the rest, including the Departments of Defense, Homeland Security, through March 22nd. So lawmakers plan to vote on the continuing resolution this week, giving them time to iron out the details of $1.6 trillion federal spending packages. And elsewhere, Mitch McConnell said he would step down as Senate Republican leader in November after 17 years on the job, setting up for another leadership contest during the presidential election season. So with all that, right, all that news out of the way, we can focus on the technicals and the levels on the S&P here. We've rallied, right, from this news and made a nice little pop to the upside, accepting the distribution higher. So over the past few sessions, what we've seen is the 50.88 to 93 area hold as a key pivotal resistance area to hold prices in this distribution. What we've seen so far on this news after the PCE report, we got a slight little head fake under this 68. I thought we'd have more of a target to the downside before we get this rally. And right now we're accepting into the new area to the upside, reverting back higher. And there's a decent bit of volume that's shaping up here pre-market. And the way I see this panning out, we're going to most likely open in these blockades higher in a distribution higher on the S&P 500, leading me to believe that the dip is going to get bought. So somewhere between 88 and 92 is going to be my major dip buying area that I want to just get long on this if that holds out and transpires. Otherwise, we might have to kind of change plans here. If we shoot all the way up into this 08, 11 area, right, 08 and 11, that's the next target region to the upside where heavy volume had been accumulated. And then, right, realistically, I think from here we're due for all-time highs by the end of the week. So let's see how that shapes up realistically. I hope everyone has an amazing trading. Let's open up our live trading room here, and I'll see you all tomorrow to wrap up the week. And we'll be hosting the stream on our YouTube for the whole